Alright, welcome to another episode of my trade review. And this is a trade review on GBPCAD. Last week price action, and last week was NFP. And also, I was looking for higher prices on GBPCAD. Now, why am I looking for higher prices or for price to go bullish, for price to be bullish last week, which is this particular candle on GBPCAD? Um, um, these are the things I like to consider before looking for any trade idea. There are steps I like to consider, there are questions I like to ask myself before looking for trade idea. So I like to ask myself this. Like the first question is, what's what is the DYOR, meaning what is the drawn liquidity? So over time and my experience in the market, I understand that price only moves for two reasons. The price only moves for two reasons. Why? Because it's either price is moving to take out or to buy stops above old highs, or sell stops just like it did here below old lows. So buy stop above old highs are old weekly highs like the previous week high, old weekly high, old weekly highs. Sell stops below price is what old weekly lows. Old weekly lows here and previous week lows. This is the previous week they took the sell side liquidity. So those are what sell side and buy side liquidity. Then the second reason price moves is because it wants to fill imbalances below and above price. Now this gap between these three candles, 1, 2, 3, you consider there is a gap between this candle high and the third candle low. So these gaps are known as what imbalances in price. So price will move because of these imbalances to be filled, or previous highs to be taken out, or previous low to be taken out. So those are the two reasons price moves. So the next question I like to ask myself, the next question I like to ask myself is was what is the bias and narrative. So this is the next question I like to ask myself. So what is the bias and what is the narrative? Bias meaning where is price going? Are we bullish or we bearish? Or we are consolidating like in a range. Then the narrative is why am I bullish and why am I bearish? So for this particular trade review, I'm bullish because price is respecting old lows and breaking above the previous candle highs to the upside, and we are also respecting what a bullish key levels and disrespecting bearish key levels. So the next question I want to ask myself is this again: what's what is the key level? What is the key level that is likely to be used? So that will be the next question I'll ask myself, like what is the key level that is likely to be used? So key levels I only focus on with order blocks and highs and lows. Those are the key levels I focus on. Order blocks and highs and lows. So this particular candle is an order block. Why? Because it took multiple lows and a major sell side liquidity, and the following candle closed above it. So you can see right here, this particular candle took out liquidities to the downside, and the next candle aggressively closed above it. So this is a beautiful order block that price we use in the future to do its reverse price to the upside, which you can see right here. So after I have provided answers to these questions: what is the drawn liquidity, what is the bias and narrative, what is key level price is likely to be used, then I can now go to the lower time frame to frame a trade idea using time and total soup in the direction of the higher time frame drawn liquidity and bias. So right here we can see the previous week was a bearish candle dropping into what discounts of this swing low to swing high of this expansion move to the upside. We had 2 weeks retracing back into the expansion move, and this last week was the previous week before this last week was a beautiful range, and we'll see how we can take advantage of this bearish range on the lower time frame. So let's look at the daily. So here on the daily, let's zoom in pretty nicely. We can see on the daily that price did what took liquidity into old key level here, which is a daily fair value gap, and you can see this was the gap between these three candles. Daily fair value gap took out old lows, and we did what we expanded higher, okay, massive expansion to the upside. So price now came back in a retracement form, and before we hit this daily key level, which is the fair value gap, and price left a beautiful daily range on Tuesday, and this is the start of last week. So let's put a vertical line there, weekly range, yes. So putting a vertical line there, and you can see how price opened on Monday. You can see how price opened on Monday. Let me bring back the line. Sorry. Alright, let me just do a new one. Alright, that's the vertical line on Monday. You can see how price opened on Monday, and we declined straight. We declined after Monday. Tuesday declined to the key level, and at the key level there on Tuesday, we can see how Wednesday did took out the daily range low, which is on Tuesday low during Wednesday, and we attacked the range high Thursday and Friday. So right here, what I can see is what's a beautiful trade opportunity that was provided on Tuesday. Then on Wednesday, I can go on the lower time frame. Since it's a daily range, I can go on the 1 hour to look for time and total soup to be in alignment in the favor of the higher time frame drawn liquidity. And from the previous time frame, which was the weekly, we can see that the draw on liquidity was above previous week highs and previous weekly old weekly highs. So it is safe to look for buying opportunities to attack those previous week highs and old weekly highs. So without wasting much time on this daily time frame, and since I've seen a beautiful daily range to trade against on Tuesday, now I can safely go to the 1 hour to look for trade opportunity. So for zoom out pretty nicely, and let me go back to the daily so I can make that key level very visible on the lower time frame. So if we go back to the daily chart and make this key level visible on the lower time frame, right about there, and yes, zoom out, and we have it now. You can see the key level, how price came to the daily fair value gap. Takes MVG. So you can see how our price came to the daily fair value gap with a beautiful range high, range low, and price left the range, consolidated, came back around 3 a.m. on Wednesday. Beautiful with time and turtle soup. Beautiful time and turtle soup to liquidate this sell side liquidity, and immediately price closed above this particular 1 hour down close rejection bearish candle. That's the signal to take a trade, but you can still go down to the 15 minutes or 5 minutes to look for a more than one entry. So on the 15 minutes, if you zoom out pretty nicely to make the candles more visible and crunch it back to the area we had the sweep. So at exactly 3:15 was when they liquidated the sell side liquidity, this old lows here, and immediately we closed above this particular down candle that took out the liquidity. This one, this look closed above it. This is what's my entry, my more than one entry, and my stop loss is below this particular one candle that took out the liquidity, and my target is the daily range high, which is on Tuesday high. And normally range trading rule says we should take out partial at the 50% of the range. So 50% of the range is make the template visible on this particular time frame as well. So the 50% of the daily range of Tuesday range high to low, the 50% is right about here. This is the line of the 50%. So for take the RR to the risk to reward ratio to the 50%, we have a beautiful 1:2.9 risk to reward ratio at the 50%. So if you take out partials here and leave some runners of your position to run to the high of the range, you have a beautiful 1:6 arrow trade. So this was my trade idea on GBPCAD last week, also NFP week, and this is how I got this beautiful trade idea, and I can run you through the steps again. On how I got this beautiful trade. So the first thing first, on the higher time frame, I want to answer some critical questions like what is DYOR, which is the drawn liquidity, and what is the bias and narrative. Bias meaning where is price going and why should price go there, which is the narrative. Then I would like to ask myself what key level is likely to be used. So key level, like I've explained, I like focusing on highs and lows and order block, and sometimes fair value gap, which is the imbalances in price. So those are the steps I consider on the higher time frame before I ever come to the lower time frame to look for a trade idea. So with that said, thank you for watching to this very point of the video. I love you. Please subscribe, share the video, and like. Good luck and good trading. See you on my next trade review.